Good evening, everyone, and welcome to this webinar on Controller to FP&A. So most of us start as accountants or accounting professionals with our respective qualifications. We have a good grip over financial statements, notes to accounts, and compliance related aspects. But FP&A is something which is completely different. It is largely performance oriented, and that is what we'll try and understand today in this quick webinar. A little bit about us before we begin with. My name is Dhawal Parvatikar. I'm a qualified chartered accountant. I've also completed my one-year executive general management program from IIM Ahmedabad. Over the last 16 years, I've served as CFO and finance leader across India and in the Middle East, across various industries like oil and gas, software, advertising and public relations, and commodity trading. I'm now the co-founder at FP&A Professionals Institute. I've also been an active mentor and an instructor over the last 5 years, and I've trained more than 5,000 professionals on various topics like FP&A, finance business partnering, finance leadership, CFO career coaching, and much more. I've also had the privilege of being part of hosting, organizing more than 10 CFO events over the last 12 months. I've built a community of 200 CFOs across the Middle East, and the community continues to grow. Right now, my entire focus is on helping finance professionals upskill in their careers. I'm happy to partner with my co-founder, Asif Masani. Asif, a quick introduction.
Thank you so much, Dhawal, for having me. And quickly about myself, I've been working in finance for over 15 years now. Started in an audit role back in 2010, and then eventually moved into FP&A somewhere in 2013. So from 2013 to 2023, I've spent about a decade in 4 different FP&A roles across Citibank, Pfizer, and then a couple of edtech companies. My most recent role was leading the FP&A function for APAC and India at Coursera. In 2023, we co-founded FP&A Professionals Institute, and we have been regularly contributing to the FP&A and the finance education space. Over the last few years, I've had an incredible opportunity to meet some of the top experts while writing books, doing podcasts. And what we try to do at Professional Institute is try to bring all of that experience in our books, courses, and the content that we share across different platforms. So over the past I think this is the old slide we have had added 2025 recently in the new one. So we must have trained more than 5,000 students in the last 3 years across all of these courses that you see, which is FP&A Masterclass, Financial Modeling for FP&A, AI, and the CGFPA, which is right now across more than 100 students. We have done 5 cohorts. The 6th cohort is right now undergoing the admission process, and we'll talk more about CGFPA as we go further in this webinar today. So welcome, and with that, I will give it back to Dhawal to talk about Controller to FP&A and more about today's topic.
Thank you, Asif. Happy to partner with you as always. So what are we going to cover today? A quick roadmap of today's session. So we'll try and understand what is the difference between the controller world and FP&A world. What does a controller function do, and what does the FP&A function do, and what are the differences, and what are the focus areas, and what are some of the key activities carried out by FP&A teams. We'll also look at some examples. Look at example of building a budget, look at example of a management report, and try and understand a little bit about FP&A activities. And finally, we look at some tips and techniques of how you can transition from a compliance or an accounting oriented role to a role. So all in all, it's going to be the next 60 exciting minutes. So get rid of all the distractions, complete attention here. We'll be having a Q&A session at the end of the training as well. So for the next 60 minutes, get rid of all the distractions, and probably we will cover as much ground as possible. I'm going to be a little bit fast, so we'll try and cover as much ground as possible to cover all the concepts that we like to share today. Okay, so with that, let's get started. Let us start by understanding the CFO responsibilities. Okay, so if you look at a typical CFO's office, right, there are 3 main responsibilities of a CFO. One is the controller function, which is all about ensuring the routine hygiene of the accounting function. Your AP, AR, GL, taxes, statutory audit, SOX audit, internal audit, all kinds of different compliance and regulatory reporting is taken care of by the controller function. And then the second responsibility is the treasury, which is ensuring adequate cash flow in the company, ensuring the credit cycles, receivables, payables, banking relationships, credit lines, risk assessment. All of those things come under the treasury umbrella or treasury function of the CFO's office. And then there is the performance aspect. Somebody needs to tell the business, how are we performing? Are we hitting our targets? Are we meeting our revenue? How much margins are we making? Which are our top 5 performing products, which are our not performing products? All of these different kind of performance related aspects need to be fed to the CFO and other senior business leaders in the company. So that is where FP&A team comes into play with activities like budgeting, forecasting, different types of financial and commercial analysis. The main role of FP&A is to provide timely and accurate insights to the CFO and other senior business leaders in the company so that they can take informed and prudent financial decisions as well. Now, most of us who start with a classic accounting qualification like a CA, CMA, CPA have a fair understanding of the controller world. FP&A is something which is learned largely through experience, right? You have to build a budget and see how a budgeting works. You have to build a forecast and see how forecasting works, right? So it's largely experiential in nature. But there are some hacks to learn about FP&A as well. So we'll discuss it as and when we progress in this training. So this is largely how a CFO office looks like and where the FP&A function fits into the CFO's office. Now let us understand some specific differences between controller and FP&A roles through the conversations that happen in these functions. The focus in a controller role is all about compliance, reporting, understanding the historical performance, and making sure that everything is reconciled and up to date. Yeah. Whereas FP&A is a forward-looking practice where we are talking about activities like forecasting, planning, what are the trends, upcoming trends, and how can we capitalize on that. All of that is discussed by FP&A. The stakeholder interaction in the controllership function largely is with your set of auditors, accountants, tax, regulators, investor relations. All of that is coming under the controllership function. And then in the FP&A world, you will be collaborating with various cross-functional team members, right? C-suite executives, BU heads, cross-functional teams, and trying to help them understand and better the performance of the business. In terms of technology, controller's role is restricted to the ERP and making sure that your reconciliations, your receivables, your payable system, all of that is captured appropriately. Whereas in FP&A, you're looking at advanced analysis, improved forecasting techniques, right? Building scenarios, scenario modeling, all of that is covered under the FP&A, and you are typically using planning tools or FP&A tools available out there, which are also known as EPM tools. Then in terms of budgeting and variance analysis, there is a fundamental difference that the controller focuses on ensuring that the budgets are met more from a control standpoint and reports all the deviations, budget versus actuals, and what has happened actually in the past. Whereas in FP&A, you're initiating a future conversation where you're trying to understand, okay, this quarter went like this. How can we plan the next quarter? What are some of the aspects in the next quarter? And what are some of the, where do we need to reallocate budgets, where we need to cut down, where we need to increase? All of these kind of futuristic conversations are happening in the world. So I hope you are able to kind of appreciate the difference between the controller function and the FP&A function. Now, when I talk about the controller function, I'm talking about the financial controller function. Then some companies, they have a role called business controller. Now, business controller is very similar to business finance or FP&A. So there they are actually skewed more towards the FP&A function, right? So finance controller and business controller are two different aspects. Now, what are some of the day-to-day questions that will come to you in the FP&A role? So let us understand some of those questions. Again, not an exhaustive list, but some questions to give you an idea of what happens in a FP&A role on a day-to-day basis. Now, your department head or your business unit head will come back and ask you, what is the Q1 revenue target for our department? How much do we need to achieve? What are some of the metrics that we need to meet? A classic question from a department head, which you will look at your budget or a forecast number or a template and then answer this question. How much have we set aside for LinkedIn marketing and how much can we spend in this quarter, or what is the quarterly breakup? A classic question from a marketing director. They will come and ask you, okay, if $100,000 is a marketing budget, out of that $20,000 is set aside for LinkedIn marketing. How much can I spend in Q1? What metrics do I need to hit? What is the phasing of this marketing spend? So these are some of the classic questions that will come from the marketing head, which you will look at your marketing plan, your marketing budget, and then answer these questions to the marketing director. Out of the 50 headcount additions that we have planned in the next year, how many can we hire in Q2? Again, a classic question from an HR head. Yes, you want to hire 50 more people in the coming financial year, but you cannot hire all of them on 1st of January. So what is the phasing for this planned hire? And that planned hire has to be in sync with the business growth. It cannot happen that the business is growing faster and we are not hiring people, or it cannot happen that we are hiring faster, but the business is not growing up to the mark as well. So there needs to be a rationale between hiring and business growth as well. And that is what you will be monitoring as an FP&A team and feeding that information to the HR director on a regular basis. How much business do we need to bring in Q4 to cover the shortfall in Q3? Again, a classic question from a CEO or a business unit head. You look at your existing performance, look at your upcoming quarterly forecast, and then answer this that, okay, here is $20,000 that we need to meet as a shortfall what we had incurred during the previous quarter. Then what is the impact on profit if the prices drop by 8%? Again, a classic scenario planning question. What happens if we drop the prices? What happens if we increase the discount? What happens if we increase the prices? Right? All of these different kind of questions will come to you as part of your regular roles from various business stakeholders. Okay, these are some questions to kind of give you an idea of what happens in the role on a day-to-day basis. Now, you might notice none of these questions have anything to do with your rule books, with your accounting standards, your IFRS, your US GAAP, or all of these things that you have learned in your accounting qualifications. None of these questions can answer, none of those rules can answer the performance-oriented questions. So that is where the FP&A role differs in. Largely, it is more commercial oriented than accounting and compliance oriented. So that's the mindset shift that you will have to first start adapting and rewiring yourself to get used to a FP&A role. Now, what are some of the key components or activities involved in an FP&A function? Now, there could be a number of small set of activities that are carried out in the FP&A roles, but largely you can group them into three categories. One is your budgeting, forecasting, and then your management commentaries. Now, budgeting is an annual exercise. It typically happens before the start of the financial year. For example, if 2026 is your calendar financial year, then October to December 2025, 3 months you will spend on planning, budgeting, and concluding those plans for the next financial year. It's a one-time activity that typically happens before the start of the financial year, and it's finally approved by the board in December. And then from day one onwards, you know what your targets are, you know what is the plan that you need to achieve for 2026. That's the budgeting exercise. Then forecasting is all about tracking the ongoing performance of the business. 3 months of actuals. Let's say I'm preparing 3 months of actuals and 9 months of forecast. Typically, we call it 3+9 forecast. Okay. I'm tracking the performance during the financial year. Unlike budget, forecasting could be a monthly or a quarterly activity depending on the cycle that your company follows. We look at some examples later in the session. Then comes management commentaries. You do different kind of analysis, variance analysis, profitability analysis, different kind of analysis, and come up with monthly or quarterly management commentary so that the management is able to understand the performance of the business and then shape some decisions for the coming quarters or the coming financial year as well. So this is largely some of the key components in the FP&A function. So now what we'll do is we'll try and spend some time on understanding the practical aspects of these budgeting, forecasting, and management commentaries. We'll start with the budgeting exercise, and we will take a small case study and build a revenue budget for the upcoming financial year end-to-end from scratch. Okay, a small case study. I will be asking some questions and you will be responding to those questions in the chat box. Step by step, we will build a revenue budget for a small company and understand how the budgeting process is executed. Okay, ready? So let's get started. Let me just quickly bring up the case study for you. Okay, I hope all of you are able to see the case study. Let me read it out for you, and then we'll follow step by step and build a end-to-end company revenue budget for a small company. So you are working with Infosys as a business finance manager, primarily looking at client contracts, business unit profitability, and business unit FP&A. So Infosys is a large company. You are part of one of the business units and you're looking at business unit FP&A. So you are concerned with FP&A for your respective business unit. Infosys is a B2B software company providing services to its various clients. B2B software services, people come up with their requirements, clients come with their requirements, we customize the software for them, develop it for them, and then deliver the projects. The revenue generated by Infosys is split between retainer contracts and projects. Now, retainer contracts, it could either be a fixed sum of money paid to us as a retainer every month, or it could be a time and material contract. Depending on the number of engineers, senior engineers, team leaders, developers that I deploy, I will get a certain amount every month. Projects are milestone based. Typically, it could be a 3-month project, 6-month project, and basis certain completion of milestones, I'm actually billing them certain invoice every month. You are required to work with the business lead and prepare revenue projections for 2024, upcoming financial year 2024. Assume that you are at the end of 2023. Senior management guidance is to aim for 12% growth over 2023. Whatever is the revenue for 2023, the senior management is expecting at least 12% revenue growth over 2023. That is the top management, top-down guidance that has come, and we will see how to execute that. Assume that you are at the end of financial year 2023. So I told you that budgeting is a one-time exercise and you work on it before the start of the financial year. So now you're at the end of 2023 and you are going to prepare the budget for upcoming financial year 2024. Okay. So let's get started. As a classic FP&A professional, I get all my templates ready. I look at my historical data. I have my 2023 number. So I've got my 2023 number ready. So I have my clients here. Then I have my template ready. I have my existing contracts. What is the retainer per month? And I have my blank template for building the Jan to December revenue for 2024. And with this blank template, I go into the discussion with the business unit head, and basis this discussion, I have captured some notes about certain clients. And now I'm going to give effect to these notes one by one and complete the 2024 budget. Okay. So let's get started. Visa, again, 100% attention, get rid of all the distractions, please. Visa will renew its contract for one more year at the same rate. So Visa is paying us $1 million per month. They are going to renew the contract for one more year. So the revenue will continue from Jan 24 to December 24. Bank of America contract ends June 24, and there is a strong possibility that they may not renew. So Bank of America is paying us $500,000 per month. The contract is going to continue till June 24. And the business unit head feels that this client will not renew after July 2024. Whatever might be the reason, they might go into a new RFP, they might want to bring in a new contractor, or they might go for a scope negotiation, or they might not want to execute certain projects. Whatever might be the reason, the business unit head feels that the retainer will not continue after July 24. So I've not taken any revenue after July 2024. IBM has agreed to renew its contract with an escalation of $100,000 per month. So IBM is paying us $1.4 million. They have agreed for a fee escalation of $100,000, which means escalation increase. So it becomes $1.5 million and will continue till the end of the year. Then comes ExxonMobil has decided to discontinue our services from 2024. Oh my God, what happened here? So ExxonMobil, which was actually my largest client in 2023, and they were on a $6 million per month retainer, right? $6 million per month retainer. They have decided to discontinue services, whatever might be the reason. They might be looking at a new vendor. They might be going into an RFP. They don't like our face anymore. They don't want to see us, whatever might be the relationship. The business unit head has given us that indication that we will not be continuing the services from 24 onwards. Now, remember, software services is a people-oriented business, right? So we have people who are deployed on this client, who are working on this client. Now, what happens to those people? We don't know. We'll see. Right now, we are only looking at the revenue budget. So we know that ExxonMobil is not going to come in 2024. Let's see. Talks with Microsoft have fructified. Contract is under discussion. Likely commencement of retainer from 1st of March at $3.5 million. Okay. So that is some relief. Now we lost one client, but we are winning another client, which is Microsoft at $3.5 million retainer per month, and will continue till the end of the year. Okay. Now remember, we are at December 2023. Typically, in case of large contract sizes, legal teams take at least 4 to 6 weeks to finalize the contracts. So we anticipate that the actual work start date for Microsoft will be from 1st of March 2024. Hence, we are budgeting it from 1st of March 2024. Let's move forward. L&T has asked for a scope and fee reduction of 20% from April 2024 onwards. So L&T is paying us $1.5 million per month. From April 2024 onwards, they want to reduce it by 20%. So we'll lose $300,000 on this, and $1.2 million will continue till the end of the year. So they are reducing the scope also, and they're reducing the fee also. So maybe they don't want to execute some projects, or maybe the quantum of work that is there for technological development has come down, whatever might be the reason. So they are reducing the scope from $1.5 million to $1.2 million. Now, next point, Ministry of Tourism are planning for a bigger project, roughly $4 million, split equally in April and May. So all this while we had some retainer clients. Now we have a Ministry of Tourism project. Now Ministry of Tourism had done a $1 million project last year. Okay. And now they want to do a $4 million project. Okay. $4 million project split equally between April and May. So I'm just parking $2 million each for April and May. Now, this doesn't exactly mean that the project starts at $1 million or 1st of April. It might start on 5th April, 10th of April, whatever. So that's why right now I'm at December 2023, and I'm going to assume that it's going to start from 1st of April 2024. So it's going to be equally split between April and May 2024. Next point, management aims to achieve an overall growth of 12% for 2023 over 2023. So in 2023, we had done $125.8 million of business. A 12% growth over this would amount to $141 million, roughly $141 million. We just took stock of all our existing clients, our relationships, our existing contracts and everything. And we noticed that currently our tally works out to $87.3 million, $87.3 million. But the management wants to achieve $141 million. So what will you do here as an FP&A lead? I want your responses in the chat box. The management is looking for a target of $141 million. But right now, basis our discussion with the business unit head, we know that we are at $87.3 million. So what can be done? I want some responses in the chat box. Come on, think you are the FP&A lead of this particular business unit. Tell me, what will you do? Type your responses in the chat box. Okay, we look at some new projects, new clients. We'll pitch for new clients. Okay, what else? Shivam says, get more clients or ask for price revision. No, we have already asked everything. So this is what our existing clients have told us, that what will they be doing with us in the next financial year. So we cannot go back and ask for more price increases. Then we go for cost cutting. So we have not come to cost yet. We're only building a revenue budget. Cost cutting is a last resort. Okay, we can push sales team to bring in new projects, new business development, trying to build a pipeline of new clients. Let's give it 10 more seconds. See if there are any other responses. No more responses. So most of you are thinking on the right lines. That is, typically what happens in a services business, there is a consistent ongoing client pitches that are carried out. Typically, at any given point in time, we might have 15, 20, 30 client lists in the pipeline who we are pitching, discussing. We know that because in a services business, there will always be client churn. Some clients will come, some clients will go, right? So there's always this consistent pitching of RFPs, bidding for certain clients. All of that is ongoing. That's ongoing in a services company. So as a next logical step, what we'll do is we'll look at the list of our pipeline clients and see what is the probability of winning those clients. Okay, and then capture some new business here. But my question to you is, how do I complete this Excel sheet? What do I put here? Now there are two aspects, right? Or two ways to do it. One, I can put a new business line item, and put a standard line at an estimated amount of what new business I want to bring in every month. Okay, that is one way to do it. A little bit more scientific way to do this is I look at my existing list of pipeline clients and just attach some probability that, okay, here this client has probably 80% chance of winning. This client has maybe 75% chance of winning. And I build some logical placeholders to ensure that I am mimicking my pipeline discussion as well. So maybe from client one, I'm just putting in a placeholder. Client one, I would be getting a $3 million retainer from March onwards. And maybe there is client two, I'm getting let's say, a $2.5 million retainer from May onwards. And then like how I got the Ministry of Tourism projects, I can aim for some projects as well. So maybe I'm putting a estimate of one project per quarter for $2 million. So let me just put 1 quarter per project. See, I'm now putting it as a placeholder at the end of the project, but that doesn't mean it will exactly come on 31st March. It means that it can come anytime during quarter one. But right now I'm in December 23. I don't know. So I'm just putting some logical placeholders basis my assessment. Now I am probably at 15%. So I only need 12% growth. So maybe let me reduce this to $1 million projects. Yeah, 12.3%. Not bad. So I'm at $141.3 million, 12%, at least 12% growth was expected. Now this depends on my confidence that out of the 15, 20 clients that I'm pitching at the moment, can I win 2 clients? Client number 1, client number 2. Then I'm through. I'm meeting my current year's targets. What is this called? In technical terms, we call this the $87.3 million that we earlier had. It's called confirmed new business or identified new business. Okay, I know where this business is going to come from. I have signed contracts for it. I have POs for it or whatever. Okay. The placeholders that we put, the logical placeholders that we put basis the study of the pipeline, new business pipeline, that is called unidentified new business, which means I don't know where this new business is going to come from, but it is going to come from some client in the pipeline that I'm pitching for. Okay. This is called unidentified new business. Now, a question to you is, in my total $141 million of budget, unidentified new business percentage is 38% of my total business. My question to you is 38% high or low? Just type high or low in the chat box. According to you, don't overthink this. Just go by your gut. Is 38% unidentified new business high or low? Remember, 38% is not the growth. Growth is only 12%. 38% is unidentified new business. I don't know where 38% of the new business is going to come from. Okay, we got 3 highs. 38% is low as we have 12 months. Okay, that's what Shivam says. Okay, some of you feel it's high, some of you feel it's low. The correct answer to this is that it depends on the context and also the historical performance of the team. If on an average, in the last 3 years, I have achieved 40 to 45% of unidentified new business every year, then this 38% is not high. This is a routine feature. But if last 3 years average of unidentified new business ranges between 15 to 20%, then this year is a problem. I don't know how we are going to achieve 38% new business because this has never been done before. Unless we know that very strong chance, there is almost a chance of signing one client, or there's almost reached the contract signing stage, but we are still calling it unidentified to be on the conservative basis. If that is the case, then 38% is not high. Otherwise, 38% is high. But as of now, let us assume that 38% is something which they have routinely achieved in the past as well, and it's manageable. And with that, we will close the revenue budget for 2024. This 141.3 million goes for submission to the CFO, CEO, and to the board. Once they approve it, this becomes the budget. This gets uploaded in the system, and that becomes our target for 2024. I'll pause here for like 5 seconds to see if there are any questions. Is everybody clear with the revenue budgeting? This is a small example. I'm sure some of you might be getting questions that, okay, here there are about 8-10 clients, but what happens if there are 800 clients? Good question. So the exact methodology remains the same for the clientele, but just that you will do a ABC analysis. Probably for the top 50 clients who form about 70-80% of your revenue, you will do one-to-one conversations with the business lead, project lead, or whoever. And for other 750 clients, you will templatize it or take data from your CRM and send it to the sales officer, sales managers. They will fill it and then give it back to you. Okay? And you will only cross-verify it for any anomalies in it. And that's how you conclude your revenue budget. Now, here we completed it in 15 minutes, but in a real life scenario, you will probably have week 10 days to populate this data. Okay, so that's why you can go and have that detailed conversation with the respective project leads or sales teams. Any thoughts, any questions? So unidentified, okay, Abhirup says unidentified new business is 54K. How can we be sure about numbers that we are projecting? No, so we are not sure about it. So this $54 million is basis a logical estimate that we can predict from the pipeline discussion that is going on. It's not an arbitrary random number that I am putting. It comes out of my discussion and the comfort level of the business teams also. If business team says, I cannot do more than $10 million, whatever it is, I cannot do more than $10 million, then I cannot go with 54 million. I'll have to go with probably $8-10 million only. Okay. So it is a point where we have reached a comfort level between FP&A team and sales team. So that, hey, this is something which we can achieve basis my existing client conversations or pipeline conversations that I might be having. It's not a random number which will come from thin air. So I hope you got a taste of how the revenue budget is built. Okay, again, this is a small example, but in the program, in the CGFP program, we cover much more detailed and complex examples than this. Let me just quickly share this case study with you. Hold on. I'll share it in the chat box. Those of you can save it as well. Okay, for existing clients, if we foresee reduction in some projects, should we include that too as a placeholder? Great question. So yes, for some clients, they may not have confirmed reductions, but our business team feels that yes, there might be a possible reduction. So you can do a negative placeholder as well, saying that possible client reduction minus 2,000, minus 1,000, whatever. That is also possible. Okay, I've shared the file in the chat box. Those of you who would like to download it, you can go ahead and download it. We'll wait for a couple of seconds. So I wanted to just quickly give you the taste of how a revenue budget looks like. Now, typically when we are preparing or doing the budgeting exercise, there are different components in the budget. Okay. So the end outcome of the budget looks pretty much like a P&L statement where you have your estimated revenue, different set of estimated costs, and comes your estimated operating profit. Okay. I just gave you the taste of revenue budget. So this way you'll be doing headcount budget, cost of goods sold, raw material, inventory, SG&A, marketing, different kind of budgeting components as well. And then your budget or your target for the next financial year gets settled. Let's move forward. We will also take questions in the end. Then after budgeting, then comes forecasting. Forecasting, like I told you, it's tracking the ongoing performance of the business. Typically, companies do it either on a monthly basis or on a quarterly basis. Now, here is an example, a very simplified budget 2024 table that you see here, estimated revenue, estimated cost, and profits. This is prepared before the start of the financial year. So this is prepared sometime in December 2024, December 2023 and approved. And this is how it looks like. And the notation that you see here is BOD, which is budget. Now, assume that we are at the end of January 24. Now, what happens at the end of January 24? We have actual numbers for January, okay, which we have updated. January sales was actually $90,000 as opposed to the budgeted $100,000. Then cost and then margin. Now, at the end of January, I will double check and test my assumptions that, okay, do my assumptions of this 100K per month still hold good? If yes, then I'll continue that as my forecast for the next 11 months. If not, then I have an option to change my forecast. This could very well be 101, 103, 105. Just one second. Lift the cup. 103, 102, whatever might be the reason, I can capture that as my forecast as well. So typically we call this 1 plus 11 forecast, which means 1 month of actuals, 11 month of forecast. Okay. And here you can see that my forecasted annual revenue is 1.34 million. I'm not calling it revised budget. Budget once frozen, once the number is frozen, we don't revisit it again. Okay. I'm calling it forecast, and my forecasted annual revenue now is $1.34 million. Now let's progress 2 more months and see what happened. Now we are at the end of March 2024. We have actuals updated for 1 quarter. And now at the end of March, I will test my assumptions again and say, okay, will my forecast numbers hold good? In this case, I'm taking the same number as budget, and that's a coincidence. This could very well be 103, 105, 110, whatever I would like to put in my forecast. There's nobody who's going to stop me from changing this. And this typically is called as 3 plus 9 forecast. 3 months of actuals, 9 months of forecast. And you see now, my forecasted annual revenue is actually 1.36 million. So I had budgeted, my target was 1.35. Right now, basis the 3 plus 9 forecast, I'm trending at 1.36 million. Okay. Similarly, at the end of June, I will prepare a 6 plus 6 forecast. At the end of September, I will prepare a 9 plus 3 forecast. So depending on the structure and complexity of my business, I will keep preparing monthly or quarterly forecast to understand the ongoing performance of the business. I hope you are able to appreciate the difference between budget and forecast. Budget is a one-time activity carried out before the start of the financial year, whereas forecast is an ongoing activity either on a monthly or a quarterly basis. Now, this is the difference between a budgeting and forecast. A classic interview question. Can you explain the difference between a budget and a forecast? Okay, so this is how you explain it. Now, after budgeting and forecasting, the third element or third component in FP&A is management commentaries or management reporting. At regular intervals, either on a monthly basis or a quarterly basis, you will be doing a number of different kind of analysis, profitability analysis, variance analysis, actual versus budget comparison, actual versus forecast comparison, different kind of margin analysis, right? Different kind of analysis. And then finally capturing that in a monthly commentary or a reporting pack, and then submit it to the board or to the CEO, CFO, business leader, whoever you are reporting to. Yeah. And here is an example of one of the slides of the management reporting pack. Yeah. So this is a classic waterfall chart. Here I am doing a profit volume analysis, profit price and volume analysis. I have my revenue for 2024, which was $35.9 million. I have also prepared my budgeted revenue for 2025, which is $55.3 million. The difference between this has 2 main components. One, price increase or decrease, or volume increase or decrease. Okay. So I want to decode this variance between 35.9 million and 55.3 million and bridge this gap through a waterfall chart. This is called a waterfall chart, and where I'm capturing the price and volume variances. Okay. On an average, you can see that the prices of my products are going up by 14%. Okay. And volume contributions in these two, cone and cup volumes are increasing, and some volumes are remaining stable, some volumes are decreasing. And I will also add an action title to this slide by saying average price increase of 14% across all categories, volume growth in cone and cup sales offset by volume dip in sandwich. Once I look at this action title, I should be able to sum up this entire waterfall chart. A waterfall chart is again a classic tool to bridge any 2 different numbers, any 2 endpoints that you want to explain. This is typically prepared either on a monthly basis or a quarterly basis, depending on your reporting cycle. This is just one of the reporting charts. Now, there could be a number of different margin analysis, profitability analysis, and number of different kind of analysis that you would be preparing as part of your regular monthly reporting packs. Okay, in the interest of time, I'm just showing you one of these slides. Waterfall chart for driver drill down. Yes, there could be different number of drivers. So here, price and volume are the drivers. There could be a number of drivers out there. Yeah. Footfall could be a driver, raw material price change could be a driver, whatever might be the driver, you can include all of that in your respective reconciliations of how you move from point A to point B. Now, these three components, budgeting, forecasting, and management reporting. So these are the three examples that I wanted to quickly share with you. Now, in your FP&A role, you will be routinely interacting with different stakeholders. It will not be a role of isolation. You will be routinely collecting inputs and updates from your respective business teams, and then providing reports and insights to these business teams for them to take certain decisions. With HR, you will be discussing activities like workforce planning, headcount forecasting, salary, increments, incentives, benefits, spot bonus, attrition savings. All of these things you will be discussing with HR. With sales, you will be discussing about revenue forecast, pipeline, quality of the pipeline analysis, sales performance metrics, incentives and commission planning. All of these things are discussed all sales teams. Then with marketing teams, you'll be discussing about ROAS, that is return on ad spends, marketing ROI, campaign performance, which channel do you allocate the budget to? All of these things you'll be discussing with marketing teams. With production and operations teams, you'll be discussing about capacity planning, utilization, productivity, yield ratio, cost efficiencies, margins, right? Constraints, all of these things you'll be discussing with production and operations. Then with supply chain, it's all about inventory management, just in time, working capital optimization, reorder, freight cost analysis. All of these things you'll be discussing with your supply chain teams. Now, all these are part of your FP&A roles. Depending on where you are structured, depending on where you are in the hierarchy, you may be working on part or all of these elements in the role. Okay. Now, again, if you notice, all of these activities, these interactions have nothing to do with your accounting rules, your debit, credit, your accounting standard. So if you want to work in FP&A, the first thing that you want to rewire is move towards commercial conversations. Stop thinking in terms of your rule books and start asking logical performance related questions. That is what is FP&A. Now, how do you prepare for FP&A roles? You may or may not have worked in FP&A roles before, okay? But how do you prepare for this shift? First of all, try and leverage your sector exposure. For example, let's say if you've worked in an accounting or an audit role of an insurance company, then try for an FP&A role in an insurance company, because at least you are familiar with the terms. You're familiar with the terms of premium, insurance, reinsurance, claim ratio, whatever are the KPIs of that insurance industry. At least you have some understanding of that particular sector, right? And even in your accounting role, you may have done a lot of analysis, claim analysis, revenue analysis, whatever kind of analysis. Highlight that to the forefront of your resume. The second tip is study management reports. You might still be in an accounting function, but try and make friends with management reporting teams, FP&A teams, and try and at least catch hold of the management reports, budgeting, forecasting, and see how those reports look like. Okay, how are those built? What are the drivers, the KPIs that the company is tracking? At least try and study those management reports, build friendship with those teams. You might not get the chance to work on it, but at least you need to get to study it. Make compliance your bridge. For example, if you're working in an audit and accounts function, or you're working with a big four or any of these audit and consulting firms, use your accounting and compliance knowledge to move over to the industry side first. In industry side, there is a lot of hybrid roles which are available, okay, which are not strictly FP&A, but it's a finance manager role. You're also doing compliance, you're also doing budgeting, forecasting, banking relationship, all of these things. At least you can land that hybrid role and start your analysis journey first. And then you can move into a pure play FP&A kind of a role as well. So make compliance your bridge and move over to the industry side first. Power BI and Tableau as a tool can be a plus. Of course, they are not a substitute for your conceptual understanding, right? If you don't know margin analysis, there's no use of you knowing Power BI, right? So conceptual clarity is absolutely important, and that's a foundation. And on top of that, if you have some tool understanding and technology understanding, that will be a plus. Then create a reason with the qualification. Today, there are certifications available. There are coaching programs available in FP&A, and we'll talk about one of them in a while. But use those to learn and at least create that keywords on your resume. When your resume lands with a recruiter, that person may not understand what you might have done. So sprinkle keywords first. The first half page of your resume should have FP&A keywords, budgeting, analysis, forecasting. Then you'll get that call. And then after that comes how to convince them in the interview of what analysis you have done in the past, or what have you done in your certification, what have you done in terms of budgeting, forecasting. So that is how you should approach it step by step. Recruiters today have less than 5 seconds to review a resume. If they don't see the keywords, they will not call you. Okay. But you can put those keywords authentically only if you know something about it. The moment you reach a finance interview, if I am a FP&A lead or a CFO taking an interview, if I ask you, okay, how do you build a forecast? And if you do guesswork, I can identify in 2 minutes that you're bluffing. You don't know anything about forecasting. But to reach that position, first you need to pass the HR interviews and at least have some logical understanding of how a forecast is built. Okay. You may have worked on part of the budget. You may not have worked on entire end-to-end budgeting exercise, but at least try and leverage that and say, okay, I've worked on part of the budget. I've supported the budgeting exercise, but I've never got a chance to work on an end-to-end budget. So these are the kind of answers that you will have to try and build for you to land that first FP&A role if you still haven't got one. Cool. So let's do a quick recap. We understood the controller's world, how the conversations are different between the controller world and the FP&A world. FP&A world has nothing to do with your accounting rule books, your accounting standards, IFRS, your IFRS diploma, whatever. That's not useful in your world. Then comes your key FP&A activities. 3 things we covered there: budgeting, forecasting, and management reporting with examples. And then some techniques and tips around how do you transition into FP&A roles. We have been speaking to CFOs on a regular basis, and there are 5 critical skill sets that we've identified that CFOs are looking for today in their finance teams. Okay. And what are those 5 skill sets? First is core FP&A concepts: budgeting, forecasting, management reporting, margin analysis, profitability analysis. All of these things are core FP&A concepts that CFOs are looking for. Then comes financial modeling. Financial modeling specific to FP&A, building revenue models, cost models, scenario planning, sensitivity analysis, trend analysis. All of these things are financial modeling specific to FP&A roles, not investment banking or valuation or all of that. Then comes data storytelling. You are analyzing the data, but it is equally important how you are communicating this data to the non-finance stakeholder, because they don't understand 10,000 lines of Excel sheets. You need to convert that to a logical chart or a graph or an insight, and then tell that story to the business team for them to take certain decisions. Then comes business partnering. Business partnering is 2 main elements. One is your business acumen. What you understand about the business beyond Excel sheets and numbers. And then comes how quickly and how strong you are in building relationships, cross-functional relationship with various business teams so that you can influence their performance. Yes, I'm sending a certain dashboard to the CEO or a certain report to the business unit head, but is he using it? Even if he's seeing the report and not implementing those recommendations, then how will the performance of the business improve? Okay. They will act on it only if you are a strong business partner and you have influencing skills to make them act on that report. That's what is business partnering. And then, of course, leverage the AI and technological developments that are happening to become far more efficient and far more elaborate in your approach to FP&A. So these are the 5 core skill sets that CFOs are looking for today. And on an average, I meet at least half a dozen CFOs a week. And I keep hearing the same thing, that we're not getting the right talent. Yeah. And that is where we at FPI, our own in-house survey says that 8 out of 10 CFOs say that it is generally difficult to find the right talent. That has been consistently coming out of surveys that we have done in the past. So we at FPI, what we have done is we have built our own certification program. It's called Certified Global FP&A Professional Program. It's a global FP&A certification built and delivered by CFOs and FP&A leaders. It has 10 comprehensive modules, which we'll talk about it in a while. Everything through experiential simulations and practical examples, real life looking examples. And then you'll also be part of a global alumni network. CGFPA course has been taken by students from more than 25 countries so far. We have a very active alumni network. You'll get personalized sessions with career coaches. You'll get placement support. Okay, in the sense that your resume review, your interview, mock interview preparation, we keep getting a lot of references and job requirements within our circle itself. Like I said, I'm personally connected with more than 200 CFOs. I keep getting requests every now and then. We post all of that on our alumni community on a regular basis. On an average, we post at least 8 to 10 jobs a week. That is how we are building that community side as well. We've also started our own job portal. It's called fpnajobs.com. Then monthly Q&A sessions, right? You can directly ask any questions to the faculty that you might have on the modules. External speaker sessions, world-class leaders, tool providers, transformation experts come to FPI and deliver guest sessions every month. And you will have access to those guest sessions every month. These are typically 60 to 90-minute sessions that we conduct once a month. And then all of this happens through seamless online access to best-in-class LMS. All the communication happens through email, WhatsApp, our community app, and everything. So you are getting access to this material in a very seamless way. Now, coming to the modules, what is covered in the CGFPA program? There are 10 comprehensive modules in the CGFPA program. I'll let Asif cover the first 5 on the left, and then I'll cover the other 5 on the right that you see. Asif?
I talk about the budgeting, forecasting, and the modules that you see on the left-hand side.
Asif, your voice is a little bit muffled.
Is it better now?
Yeah, go on.
Yeah. So let me talk about the budgeting forecasting module first. So what we do in the budgeting forecasting module is we cover each and every concept relating to budgeting forecasting, and not only just theory, but also how do you build budgets practically using real life like data. There are capstone projects where you will take raw information or raw data that you collect from different teams in the organization and then turn that into a budget step by step. And at the end of that project, you would be presenting that as a CFO presentation or as a presentation that the CFO would like to look at the end of the budget cycle. So that is in short the budgeting and forecasting module. AI finance, AI for is a relatively new module and it is changing every day. So we try to bring in all the latest FP&A and finance use cases using tools, especially the newer AI tools that are available these days, including your day-to-day chat bots or the chat tools like GPT, Copilot, Gemini, Perplexity, Claude. Uh, and also then there are specific tools which are required for specific purposes. Like there is an AI tool which you use for modeling, the tool that you use for working with Excel, there's a tool that you use for doing forecasting. So there are specific finance tools that we can use and improve our productivity using AI. All of that is covered, and it keeps we keep adding to that as in when we discover new use cases and new tools. Management reporting is a very I would say practical hands-on module where we will give you a real-life looking management reports, case studies, examples where you will face situations and you will be building management reports using data, using the simulated environment that we have. So we cover your usual management reports that are commonly used in FP&A, including your month-end reports, the reports that goes to the different business teams, so the HR headcount report or the sales and the marketing report. Then you have your flash reports, then performance management, including your balance scorecard, KPIs, OKRs, variance analysis are some of the topics that are covered in management reporting. I'm sure there are more, but these are what I can share in summary. Then you have the financial modeling module where we teach you how to implement financial modeling best practices in FP&A use cases. So we cover FP&A relevant day-to-day use cases where you can apply financial modeling tools and techniques. Some examples of topics covered here are revenue modeling. How do you do long-term capital budgeting or budgeting for long-term projects? How do you do scenario planning, sensitivity analysis? How do you do cash flow forecasting? There are about 10 different use cases and examples that are covered, which are very specific in this module. Then we come to the right-hand side, which is data analytics and financial analysis. Let Dhawal talk about those modules.
Fantastic. So one thing that is common in your FP&A roles will be that you will be dealing with large chunks of data, both financial and operational data. That is where your ability to navigate through these data become important. So that's why in the data analytics module, we teach you Power BI, Power Query, SQL, at least the fundamentals of it. We don't claim to make you an expert in these tools, but at least we take you to a level where you are comfortable to use these tools in your day-to-day roles. Then comes financial analysis, different kind of internal analysis like horizontal analysis, vertical analysis, profitability analysis, margins, reportings. All of these things are covered in financial analysis. This is different from variance or ratio analysis, right? So it's ratio analysis more from an external investor standpoint, but financial analysis all from internal standpoint that you look at from a CFO's perspective. Then comes storytelling and presentation. I think I briefly covered on this. How you communicate your story through best practice slides, charts, what kind of graphs to use. All of those things are covered in the storytelling and presentation module. Strategy, which is again very important, as in when you get senior, your senior management will start talking strategic language, right? They will talk in terms of strategic frameworks. And if you don't understand the linkage between those frameworks and FP&A, you will fall behind. So that's where we cover all the popular strategic tools with practical examples of how they are linked with FP&A, yeah, and not just any random strategy. Then business partnering, your ability to develop your business acumen, your ability to partner with the business on various cross-functional projects. We cover at least 7 to 8 different real-life case studies of how you can truly partner with different cross-functional team members to execute and become a solid business partner. So all in all, 10 solid modules for FP&A. Don't just think about this as a course or a certification. It's Asif and my 20 years of experience fast-tracked into a 6-month program. Yeah. That's what CGFPA will do for you. It just has the ability to easily fast track your careers by a few years. Now, what is the eligibility for CGFPA? You need to have either a bachelor's degree or a global equivalent in finance, accounting, or business, or professional qualifications like CA, CMA, CPA, CIMA, or any equivalent of your country. Okay. We don't claim to be a substitute for your primary qualifications. In fact, we are a supplement for these primary qualifications because these are not taught in your respective accounting qualifications. Yeah. We are a CPD UK accredited body. You can claim continuing credits in your respective accounting qualifications that are required as well. How will you get the CGFPA certificate? There are two things. One is you need to attend the classes live at least 50%. So every Saturday we meet for 2 hours for 6 months. It's a 6-month coaching program. Every Saturday we meet for live by 2 hours. Okay? And then you need to at least attend 50% of the classes live and submit the capstone assignment before the stipulated deadline. This will enable you to attend the final examination. The final examination is a 2 hours, 50 questions, multiple choice questions type examination. And once you complete the examination, you will be awarded the certificate from FP&A Professionals Institute. We are an independent body at this point in time, and we are not associated with any other accounting bodies at this point in time. Okay. Then the ROI for a course like this or a program like this, I leave it to your imagination. The course fee investment in this program is $1,695. There's also an option to pay over 5 installments. The duration will be 6 months, and the time involvement is roughly 3 to 4 hours. 2 hours of live classes and about 1 to 1.5 hours of your own time investment is required for you to go through the case studies, the materials, the pre-reading. Sometimes we give you some case studies, sometimes we give you some pre-reading videos to go through. You need to go through that and then come to the classroom prepared. So every Saturday we meet for 2 hours. The upcoming batch is starting in September. The classes will be from 6 p.m. to 8 p.m. IST. 6 p.m. to 8 p.m. IST. Okay. The orientation is on 6th of September. And the classes are starting from last week of September. The date that you need to remember is 27th August 2025. That is when the second round of applications for the cohort are closing. The first round of applications have already been closed. Make sure that you complete your applications. Let the team check your eligibility. Let the team come to you with the ongoing offers or whatever, right? So make sure that you are able to fill in your applications before 27th August 2025 for you to be eligible for the existing cohort. Again, don't just take our word for it. There have been tons and tons of testimonials. You can reach out to any of your previous alumni who have completed the CGFPA program. Many of them have been able to transition into FP&A roles. Many of them have implemented a lot of frameworks that they have learned in the class in their own respective jobs. So feel free to reach out to any of your alumni, and then they will be sharing their experience about the CGFPA program as well. Okay. Again, just a quick reminder on the date. Complete your applications. Applications and the brochure link is in the chat box. Asif has already put it in the chat box. Complete your applications before 27th August 2025. Okay. Also, I would encourage all of you to sign up and create a detailed profile on fpnajobs.com, where we keep posting all our vacancies that we come across in our connections. And also we try and bring in the vacancies which are available out there. We are building this portal. It's a new initiative which we launched last month. We have an in-house recruiter as well, with which we are slowly now building the jobs profile and the candidate placement services for our students as well. Okay, so make sure that you create a detailed profile on fpnajobs.com. Okay, so if you're somebody who is still unsure that if FP&A is for you, we have a 4 weeks program, which is for a beginner to intermediate level program. It's called FP&A Masterclass. It's available on our portal, fpnaprofessionals.com. You can go ahead and start with FP&A Masterclass. But if you're somebody who is ready to take a leap into FP&A, serious about FP&A, then go for the CGFPA program. But if you're just a beginner, you're still thinking whether FP&A is for you or no, then definitely go for the Masterclass. It covers all the essential modules like budgeting, forecasting, management reporting with practical examples. You can go through the FP&A Masterclass, and at least it will take you to be ready for the interview or at least your first FP&A job, right? So if you're at a beginner level, go for FP&A Masterclass. There are other resources that you can utilize as well. There is how do you build an FP&A resume? How do you prepare for FP&A interviews? All of these things are available on our portal, fpnaprofessionals.com. You can go and leverage these free resources as well to get started with your FP&A careers. So this is what we had to share for today. One thing that I would like to mention is that there is huge demand for FP&A. You take any salary survey from any top institute, top recruitment agency like a Michael Page or a Robert Half or any of these, you will notice one pattern, that is FP&A manager, FP&A analyst roles are earning at least 25 to 30% more salary than regular finance and accounting jobs. So all the very best for your careers. Again, my advice to you would be that to delay in learning about FP&A. We get so many requests. The issue is not the jobs. The issue is always getting the talent. As we speak, I'm working on 4 FP&A positions. I'm not getting the right kind of talent, right? So it's always the issue. So make sure that you are able to upskill yourself, be relevant in the market. AI will come and automate everything that is rule based, and accounting is going to be the number one in that, right? So try and move towards a role which is business support, business partnering, decision support, right? That is where your future finance roles will survive. Okay, all the very best, guys. Thank you so much.
Thanks.
See you in one of our sessions. Thanks. Bye-bye.